Today, MFA is going to, of course, talk about internal audits. So, MFA, without much ado, I will now invite you to, of course, interact with them. And if you have any questions, we will give you the floor later on, okay?
Okay. It's whatever time it is in the Gambia, my best of all the best greetings to each one of you as students of knowledge, scholars, and future, whatever you may call it. For just to give you, I think Dr. Sanyang said something that was just amazing. I don't know how sometimes he put together stuff, but it's just impressive. So he concluded with something. That is where I wanted to catch up, and then I will explain myself. He said, sometimes you will come up with a genius idea in setting up a business, and then you will try to figure it out where to get the money to keep yourself going or the business going. In other words, going concern when you dig into accounting. So one of the ways is through shareholding or through banking. The reason why I started from there, it has something to do with auditing, and I will explain how auditing came into being. That one was an exemplary one. So, but first, my name is Salieu. I am currently in Wisconsin, and my last name is Bojang, just in case. I've been here for a while, pursuing the same that you guys are pursuing at the University of the Gambia. I'm very much interested in learning, just like Dr. Sanyang and all of you. To be very honest with you, let's keep up the pace. Hopefully, Africa will one day be just like Singapore or China or whichever great country you can even think of. It starts from the investment of the human capital. As humans, we also endeavor, keep learning and learning and learning. And then we'll talk more about that, organizational learning and learning organizations. It all has to do with something with this very interesting topic we call internal audit. So feel free to ask any question. So feel free to point and ask you people questions. So it will be an interactive format, including Dr. Sanyang himself. We can all jump in and just have a give and take. So hopefully things will go well. So my experiences ranges. I have experiences in microfinance. When I was in the Gambia, I was working in a microfinance. I was teaching in the Gambia High, GTTI, and so forth. And then I also do conduct research. So this is something that I'm very interested as a future career. And then I worked in the real estate here in Chicago. So I have a little bit of experience in real estate. I've been working in the real estate sector for about 10 years. So I think a little bit of a fair experience that I'll be sharing here. And then in addition to that, sales and marketing is something that I really, really love. I do it as a full-time with Apps Media, an organization that Sanyang and many others happens to facilitate for it being in the Gambia. And then entrepreneurship for that matter. And Sanyang was so generous, not only to students, but former students like myself, to be coming here and there and be sharing thoughts to one another. So in that, insurance is also within the rim of my experience. So I also studied insurance at Gamstar Insurance for a period of a time. So these are all areas that will be factored in this topic we call internal audit. And my institutional affiliations, I'm affiliated to CUC Chicago. That's where I studied my PhD program. In fact, I'll be enrolling for my spring. The latest will be December 15th. Just few courses to go. And then on top of that, I'm also affiliated to Apps Media. Apps Media is a media organization that is soon to be established in the Gambia, but it will have its tentacles within the broader African continent. So if you are a student and you are more into learning and doing this knowing, we call knowing by knowing, we will suggest to each one of you, out of your own generosity and time, you just Google Apps Media. If not, you type appsmedia.com and then subscribe to be receiving any information that is sent to its website through your email. And from your email, anything that interests you, you can just click on it and go to the website and read. Fascinating stories about the Gambia, fascinating stories about Africa, and fascinating stories about the world. It's a news media. It's called appsmedia.com. Please, as students of knowledge, just type appsmedia.com, go to the website and subscribe. Today is November 6th. The topic I am given to handle as an interactive course is called Internal Audit. Where lunch stopped, that was a genius, fascinating moment. So I'll just scroll for a moment and then we'll go in there. So if you looked at it, we will touch on the basics of internal audit. So bear with me, I do explain a lot. So if you can take notes in addition to the slides that is being offered, that would be great. So whilst I am explaining, some concepts will flow in my mind, and as a result, I think that will make it more interactive. Lang said, business ideas can come into our mind. That's called creativity. When you have new ideas in your mind, and in turn, you use those new ideas to innovate a business or a venture of any kind. And in doing so, you will need some kind of capital. And needing money, you either go to the bank or you look for people to buy in other words, to become shareholders. That's the only way you can make money. Either loaning or you get people to buy in to become shareholders. And these people, they will love to be trusted. They will seek some form of a trust before they buy in. That trustworthiness, that's where auditors comes in. That's where auditing comes in. So let me give you a background history of this. In the industrial age, you have factories being set up. And these factories have to undergo production. And in fact, when you read Adam Smith in his Wealth of Nations, they go beyond producing a little but mass production. And by producing mass, that's where the term industrial revolution comes in. To produce massively, you will need capital, money. And needing capital money, they go to the banks or they just get in people to buy in shares to become owners and they raise money, just like Apps Media. And in doing so, before you buy in or a bank to loan a particular business setup, they would like to know whether you are credible, you are trustworthy, you are someone we can loan the money, or you are someone we can buy shares from. What facilitates that is called auditing. What facilitates that are auditors. What facilitates that are called audits. So in nutshell, auditors, their job is to give credibility, to enhance credibility, trustworthiness for what managers in a factory are doing, their information, to make it more relevant, to make it more trustworthy, for the banks to loan the factory to undergo a mass production. That's why if any department in the Gambia, any organization in the Gambia, if you don't have auditors, what we call internal auditors, then you are at a risk of not being a going concern business. The Gambia as a state needs its own auditors. Each sector in the Gambia needs its own auditors. The sectors in the Gambia or the units or the departments in the Gambia, like GRA, has an internal audit. But the Gambia also instituted an audit that oversees all of these auditors. So those are external auditors. But today, our subject matter of discussion is internal audit. So you see how it all came into being. During the Industrial Revolution, factories have been set up. They have to massively produce, and as a result, they will need money. These monies are gathered from the banks or from shareholders. But the auditors have to audit these factories in order to make them trustworthy, in order to make them a business unit or organization that people can respect, can say, I can put in my money, or the bank can say, I can give you a loan. So you see the fundamental role of auditing, audit and audit staff. So these are three different things we are coming to explain now. What is internal audit? As on this slide, you can see it. Let me just make it bigger. Okay. Internal audit, a department within an organization responsible for providing unbiased and objective assessment of the organization processes, systems, and procedures. Unbiased, the key words here, unbiased and objective assessment. That is called internal audit. Internal audit is an organization. It's not a human being. It's a unit within GRA. It's a unit within the Ministry of Finance. And its responsibility is to assess. What does it assess? Processes, systems, and procedures. But in doing so, the people engaged in auditing has to be unbiased and objective. Do you see the point? So if Lang is to ask each one of you, what is internal audit? And you say it's a process. But this is a unit in an organization. And what does it do? Assess. What does it assess? Systems, processes, procedures. But it has to do so objectively and unbiasedly. That is internal audit. Then the continuous tense comes in. What is internal auditing? You see, internal auditing is different from internal audit. Do you see the difference? So you can read it for yourself. What does it say? It is an independent, unbiased assurance and consulting function to help improve and increase the value of an organization. The key thing here is consulting, unbiased assurance, and independent. Now, let me explain independent, unbiased assurance and consulting as a function to improve and increase the value of an organization. So if you study accounting, you will do what you call goodwill. Goodwill accounting. Goodwill, in other words, it means reputation, building a reputation of an organization. But this is a whole thing you have to do in accounting. So that is what they do. They increase the goodwill of an organization. They improve the value of an organization by doing three things. They have to be independent. They have to do what you call, they have to give assurance, and at the same time, they have to consult. So in other words, internal auditing is all about consulting and giving assurance. The continuous tense of audit. Auditing, giving assurance and consulting. So I'm coming to explain a little bit so that you can understand these terms. Now, independency of an auditor, you see, there are regulations, there are laws, there are policies that also contributes to these auditors in the Gambia. It helps in making them to be independent. If there are laws not available in the Gambia to make these auditors independent, they will be subject to being biased. But if they are independent of the organization, like an internal audits are within the organization itself. They are the same employees of an organization. They are not outside employees. They are inside employees of an organization. But they are independent. Their department is separate from other departments. You have to remove them from the other departments. That way they don't become biased. That's number one. Number two, you incentivize them very well. If you don't incentivize them very well, they may be subject to being biased. And nowadays, there are laws and policies around the world that these auditors, their pay should be made known to everyone in the department. Now, but it's more than that. The assurance part of the consulting and the assurance part, consulting is more of an advice. You see, the auditors, what they do is when they investigate or they do their routine exercise of the organization, what they generate is called an opinion. That opinion is what they used and give it to the audit committee, and then the audit committee will give it to the board of directors. So in that process, what they do, they don't only assess, but they also advise. So that's the difference between internal auditors and external auditors. Internal auditors, they assess, and as well they can advise the board as well as the management in the conduct of what the results earned from auditing. So in other words, in short, internal auditing, these people not only assess, but they consult. They not only assess, but they advise. But in doing so, they have to be independent of their work. And in so doing, the results attained from auditing increases the value of the organization and improves the value of the organization. So that's internal auditing, assessing and advising by investigating or identifying what they're supposed to identify, and the results are ultimately improve and increase the value of the organization's activities. That's internal auditing. Now, internal audits, when you see audit with an S, so these are basic terms that you have to understand, because if you see audit, you see auditing, you see audits, these are three different things. Audits, these are the reviews. When an auditor does its investigation of an organization, the reviews generated from the investigation are called audits. So audits, in essence, are reviews. Now, we will go to internal audit staff. Who are these people called? We call them auditors. But the auditors are also different. You have internal auditors, you have external auditors. Internal auditors, to be honest with you, you don't necessarily have to be an accountant. I don't know of the Gambia very well nowadays, but in the West, you can be from the science and you can become an internal auditor. You can be someone with a degree in history, but you can become an internal auditor. But for external auditors, definitely you have to earn a CPA. You have to be a chartered public accountant. You have to be satisfied by professional bodies, whether ACCA or any other stuff. And then you can become an external auditor. So external auditors are completely different from internal auditors. So by and large, this is the basics that you have to understand: internal internal auditing, internal audits, and internal audit staff. So with that basics, then we'll go to slide number 2. I think it will become more interesting once you have the basics in the mind. That an audit is a department that does the job of the assessment, but unbiasedly and objectively. But the auditing part is the consulting and the assessing part. And the audits are the reviews generated by the auditors. And the auditors are the staff themselves. But here in this case, we are only confined to internal auditors. External auditors is a separate thing. So let's go to the next slide. Now, the purpose of internal audit is always very good. When you become an internal auditor or an aspiring internal auditor, it's always good to know the purpose of being an internal auditor, or the purpose of the audit itself, that is the organization itself or the unit within an enterprise, or the act of doing, which is internal auditing, or the purpose of the audits, which is the review. Once you know the purpose, then you are clearly focused on, oh, if I read this audit report, I know what I am looking for. If I see an auditor coming to GRA, I know what they are coming for. The internal audit we have in GRA, I know what they are there for. So that's called the purpose. The purpose is very important. So let's look at 3 key things. It's more than 3, but let's look at 3 key things. Number 1, provide objective information on risk, control environment, operational effectiveness, and compliance to the board and management. They provide objective information in order for managers and the board of the organization to make informed decisions. To be honest with you, the objective information they come up with, the auditors come up with, to us, it will be an opinion. But those opinions are for the board and the managers within an organization to make informed decisions. That's one purpose. Because to be honest with you, a layman like me on this side, some of these stuff that are undergoing within an organization are so complex. So we need people with the expertise to be able to separate what is here, what is here, what is here. And with that, they help the board and the management to make informed decisions about the organization. Very important. That's one great purpose. Second, to safeguard the organization against fraud, waste, and ensure strict compliance with laws and regulations, instilling a sense of security and confidence. What is important here is the last two words, security and confidence. So another purpose of an audit is to raise confidence, to safeguard an organization by enhancing its security. That's it. The first one, what do we say? They provide us the objective information to make informed decisions. The second one, they raise the confidence of an organization. They raise the confidence of shareholders to buy into the organization. But not only that, they raise the security protocols of the organization. The third one, improve the credibility of information prepared by management. You see, management come up with all kinds of information regarding the organization. But when they are audited, they raise the credibility of that information. So these are the three main purposes. Raise the credibility of the information provided by the managers. Raise the confidence level, the security level, as well as help us make informed decisions about that particular organization. So you can see how the purpose of internal audit becomes a strategic affair. So that's the purpose of an internal audit. You remember, internal audit is different from internal auditing. Internal auditing is different from internal audits, which is also separate from the staff. We will go to the next slide. Now, it's important, if you know the basics, you know the purpose, it's also important as an internal auditor or an internal audit within an organization to know what is it different from the external ones. There's a difference, because if you don't know the difference, then you as an inspiring auditor, you wouldn't know whether you want to become an internal auditor or an external auditor. If you become an internal auditor, what do they do contrast to an external auditor? So it's good to know the difference. Number one, we say internal audit, auditors work for the organization that they review. An internal auditor is within the organization. Same employees doing the review of that organization. But the external auditors are outside employees. They come from outside to review the organization. But the internal auditors, they come from the organization itself. They are inside the organization. They are staff of the organization. So that's one difference. Number two, audit reports. For internal auditors, they are shared to the management and the board only. The reports from the audit, for internal audit, they are shared to only the management and the board, not to people outside the organization. But the external auditors, when they audit, the report, they are shared to people outside the organization. We call them the shareholders or the stakeholders. When the Auditor General's department, if they audit any parastatal within the public sector, the reviews, which becomes the report, which is also called the audits, they are compiled in a report. And that report is for every Gambian who is a shareholder to the Gambia to know about it. So that's external. So for external audit, the audit reports are shared to every Gambian. But for GRA reports, being audited by the internal auditors is only shared to the GRA board and the GRA management. That's one difference. So number 3, internal controls. Internal controls. For internal audit, they are performed on compliance, management risks, processes, and governance. But for external audits, the internal controls are performed on the financial reports. So internal controls, I will explain what that means. That's why when you define management, it's called PODC, planning, organizing, directing, and controlling. The controlling part has something to do with internal controls. Controls in governance, controls in management risk, controls in processes, controls in compliance. So you can write a thesis on the controls in compliance, a whole assignment paper on controls in processes, a whole thesis or dissertation in controls in governance, which Madi Jobate is very good at, controls in governance. So the internal audit, internal controls are performed on compliance, management risks, processes, and governance. But for external audit, internal controls are performed on the financial reports and financial report. Financial reporting and financial report. So I want you to underscore that. Very important, because in internal audit, you do a lot about internal controls. So if you mistaken what internal controls are performed on the internal audit contrast to external audit, then you will be confused. Now, number 4, another difference. Internal audit, assess and improve. These are key words you have to take into mind. Internal audit, assess and improve. But external audit, they check and confirm. They only check and confirm. So you have to know these 2 key words. So because if you come in and say, let's say, for example, what they do actually is not only to check and confirm, but for accuracy, because these are, bank reconciliation and all that stuff, journals here and there stuff. But I will give you practical examples as we go forward. So these differences will be much clearer when we are moving forward. So, but it's good you just trace a little bit of it. If you cannot catch all the 4 plus many more, just catch two or three in your mind. So the differences between internal audit and external audit. And what I did was, in the summary, that will be the last slide. I just, not only I summarize it in the best I can, but in the summary part, which is the last slide, I also summarize it in the best of my words. So that way it's easy for each one of you to just keep in mind. That's why, I don't know if you guys know this, all of this are born from 2 concepts in management: organizational learning and learning organizations. So what internal audit or auditors or audits are all geared towards is to make an organization to become a learning organization. So learning organization, in essence, these are institutions or organizations or companies or states or countries that does its effort to make its actors or people or citizens to be learning about the organization itself. But unfortunately, many of our institutions or states or governments or departments in the Gambia and in the African continent, they are not learning type of organizations. In other words, they don't believe in learning being a construct of that very organization for people, not to only grow themselves, but to grow the organizations. But in the West, they believe in learning. Their institutions are learning organizations. All they are interested in, making their people learn. So how did McDonald's came into being? McDonald's is McDonald's today because of the restroom. But even the restroom itself, there was a lot of learning that was employed in it. I'm just from McDonald's right now. In fact, I'm eager sometimes to use their restroom more than my restroom. But boy, you wouldn't believe, man. All their institutions are learning organizations. So organizational learning is the opposite. It's in which case the actors of an organization become vested interest agents in learning to grow the organization. So learning organization has to do with the institution. Organizational learning has to do with us. So you can see the difference. So what are internal auditors doing? Internal auditors, they go and look into the material of an organization, assess them and improve them in order for managers and the board to make informed decisions. So in other words, they are making that particular organization or GRA to become a learning organization. So you can write a thesis. You can have a whole thesis on learning organization. When you are graduating from the Gambia, you can say my thesis will be focused on learning organization within the contour of internal audit. So that gives you a clear perspective of the difference between internal audit and external audit. That gives you a difference. Types. Remember, internal audit is an agency within an organization that does what? Assessing and providing information that will be valid enough for the board or the managers to make informed decisions. But we have many different types. In other words, if you can say types mean focus areas. What are the areas of focus for you becoming an internal auditor? So we have what you call operational audits. We have what you call performance audits, IT audits, financial audits, environmental audits, compliance audits. Some of these were not within the realm of the different types of audits because now organizations have evolved. We become more social. Organizations have become more social. Apps Media one day will be helping students. As a result, we are projecting, Apps Media will be projecting its lens to be a social enterprise. And in that, what does it have to do? When we have internal auditors, they definitely have to do what you call not only environmental audits, but how Apps Media engages itself with the external enterprises, compliance, because we'll be dealing with the laws that has to do with the state. So let me explain this a little bit. Operational audits has to do with the resources. Mostly you focus on the resources if you're doing operational audits. But remember, audits are reviews Remember, if you see an audit with an S, those are reviews from auditors. So what do they focus on? When you read something that is an operational audit, it's actually you're focusing more on the resources of the organization. Just to give you an example. So you have this cleverly person in management. It's called McKinsey. McKinsey came up with what you call the 7S model. So 7S model, it has 7S in it. It's a model that guides the growth of an organization or what an organization is supposed to do in order to grow. Inside the 7S, you have the skills, you have the structure, you have the system, you have the shared value, and so forth and so forth. So the skill and even the shared value, including the staff, which is also another S, these are all resources of an organization. So if you are doing an audit of a resource to an organization, it's called operational audit. So you assess all of those. But how do you assess it? Let's say, for example, there is let me see recently what happened in the Gambia through apps media, because you know, all the news comes through apps media. Most of the news, we have it on apps media. So Madi Jobate was concerned about the recent news that just pops up. Is this, I think if I'm clear with the story, is this. There are nine parastatals that can go, that are now being granted based on how the National Assembly approved them to be doing their own procurement without needing the GPPA or something of that nature. I'm not too sure. The one that is in charge of procurement. So these 9 parastatals, including the recently audited agency, which is the Electoral Board, is called what? What is the name of the Electoral Board that oversees the elections in the Gambia? IEC, correct. So the IEC is part of the 9 that is selected to do its own procurement. As per Madi's story, that the National Assembly approved these 9 areas, 9 parastatals within the Gambian organization to be doing their own procurement, as opposed to the institution that is obliged to do it with a GPPA or I don't know. But in other words, if the reason why I pointed that here is if those institutions are allowed to do their own procurement for themselves, that is most likely to generate insight in them, some bias, and some kind of few stuff going around there to say for others to say you're not fair, where you bought the material, who is contracted to do to supply us materials and so forth. So I think there is if the auditors are to audit that particular one, which basically has to do, if you looked at it, I don't know, Madi's argument there is about compliance audit. So because the compliance audit, what it does is it checks the laws and regulations. So the laws and regulations are saying that GPPA is supposed to do that, but why would the National Assembly now grant those 9 institutions, including the IEC, which has just been recently audited, and the audit report indicates that there was problems there. There were problems there. So they will check into the laws and regulations. That's called compliance audit. So we'll take it from the bottom and goes up. Environmental audits analyze environmental impact and legal compliance. So this is where the NEA comes in. So the NEA, it checks all those parastatals. Yes, you are doing business to grow the Gambia and for us to become a full republic in the sense of good. A republic means good. So, but in the process, if you are doing business and you are littering stuff, you are polluting the environment, then you are if the internal auditors within that particular organization, like the petroleum sector, if they do the environmental audit of the petroleum agency and they found out there are a lot of pollution, then definitely they're breaching some legal compliance there, because the society is supposed not to be polluted, and so forth and so forth. And in that case, the auditors can quickly trace that there are environmental mishaps that needs to be corrected. So the board of the petroleum agency or the managers of the petroleum agency, when they get the audits or the reviews from the audit report, then they will say, oh, you know what? There were leakage when it comes to gas and so forth. And that in essence is costing the environment. So, and then one of the bigger purpose, in fact, in the 1900s or during the Industrial Revolution, if you remember, actually, the main purpose of the internal audit is to lower cost of what we have to incur. So that's one of the purpose of the audit. So that's environmental audit. The NEA can step in and check, or the internal auditors can check the petroleum agency responsible in the Gambia and see that, oh, there are a lot of pollution, and then there are a lot of gas leakage, and there are a lot of inefficiencies in the production sector, and as a result, the environment is highly polluted, and so forth and so forth. And the board and the managers will see, oh, we just realized that. And once you realize that, the law says this, the law says this, the law says this, and then it can be corrected. So for financial audits, they recalculate the financial reporting. So you see that one, because the financial audits usually is the external, the internal auditors do the recalculation. So let me give you an example of the financial audit. Let's say GTB as a bank, or Islamic Bank, or EcoBank, or any of the banks. Now, they do have what you call journal entries, and they're not only journal entries, but they will have bank statements to reconcile. Now, if daily cash the daily cash transactions have been done, and then I go and extract the bank statement and I do reconcile. Now that reconciliation process, and then I will check the bank rec. At the end of the day, either the supervisor or the manager there has to sign. If a signature is missing, at the end of the day, I know that the financial audit, the internal audit, doing the recalculation of the financial audit, will say a signature is missing in this particular section. And that's supposed not to be the case. So you can see that becomes a mishap to be traced by the auditor responsible, or the team of auditors responsible internally to look at GRA before the external auditors arrive. So signature is one thing. But I can also do this. So let's say, for example, if you go to Sankonsilla, I don't know if Sankonsilla is still operating, but if not, let's take any productive sector within the Gambia. So these people, when they go, they will generate you an invoice. And the invoice will have quantity, price, and the total. So the price will be automatically generated by the computer. And then it does the price times the quantity will give you the total. So what the internal auditors in that case will do, they will do what you call internal control. So in the internal control, what they are doing is they will be checking whether what is being generated by the computer the quantity plus the price to the total is actually the case by recalculated. So in that recalculation is called financial audits. So you see, what financial audits is way beyond that. It's much more sophisticated than that. So because sometimes you have what you call dual scenario, whereby not only is the bank reconciliation plus the journals, but then you can also redo all of this calculation by taking a paper trail and check whether if you recalculate by yourself is what is exactly what the computer is generating vis-a-vis. So they do a heck of a great job in the financial audits. So the IT audits, they review the information systems and the infrastructure. So, you know, the infrastructure is different from the information system. So the infrastructure is actually what GAMTEL actually does, making sure that we have this bandwidth, fiber cables, and all that stuff. All those structures. So, in other words, the infrastructure are the structures according to McKinsey. So, out of the 7S model, you have what you call the structure. So, the structures are very important in an organization. You see, Apps Media will soon to start, but before start, they are developing all their structures, and they are putting all their structures in place. As soon as they start, through those structures, the information is relayed through those structures. So McKinsey 7S model, it has the hard part of it, it has the soft part of it. So the hard part of it is those are the hardware, those are the real structures where the information is relayed. So in the IT audit, this is a recent one. It wasn't part of the 4 main audits, like operational audits, financial audit, and the compliance audit. IT audit came in because now technology has overtaken human activity in this world. So IT audit is recently been added. So you have to audit. Okay, let me give you a clear example. At Islamic Bank, their online system, they are graduating from their former online method of banking to a new method of banking. Now, fortunately, I bank with Islamic Bank. They are doing a great job because they just wanted to improve the entire Islamic Bank. But in graduating from old to new, some customers get stuck in the process, because we wanted to do some transaction during that time, but the old system was all blackout when the new system is yet to come in. You can see where the infrastructure and the information system can be audited. You have clients, they want to do a transaction during a particular time, but because they are doing a fantastic job graduating from old to new, but the old one is being blacked out, the new one is not ready, and then I cannot do my transaction. So if an internal auditor within the Islamic Bank is to audit during that time, he can see there are lapses there. Because in America here, if you are graduating from old to new, you can still access your old whilst the new is going on. But in the case of Islamic Bank, the old system go dark, completely blank, when the new is not yet ready. So you can see there are lapses there. So that's one of the areas where IT internal auditors can do favor for an organization, for the board and the managers to know what is going on. So, but there are a lot in the banking sector that IT audits do a heck of a good job, and so forth. So let's go to the performance audits. So you see in management, is the best definition you can give to management is PODC. The C is the control part. The control part, what you do as a manager, you set standards and you work towards that standard. And as you are working towards this standard, you evaluate your performance. So performance audit has to do with auditing the staff of an organization, the employees in an organization, the actors within an organization. You see, there is a great scholar by the name Victor Vroom. Victor Vroom is a professor at MIT. He came up with a very great theory in management. It's called the expectancy theory. The expectancy theory works like this. Expect something to happen or expect to achieve something, but you have to put in, sorry, 1 second. So performance audit, you set a standard. And once you set a standard, you work towards that standard. And when you are working towards that standard, you evaluate every single thing. So Victor Vroom says, put in effort, and your effort will yield a performance. And the performance will then yield a reward. Every single one of us in this classroom, once you put in some effort, your effort will bring about performance. And your performance will in turn bring about a reward. And your reward is to get an A+. But not only an A+, but to know the subject matter. So what the performance auditors are saying, in the internal auditors within an organization have to audit the staff or the employees in an organization to see their performance level. Because, to be honest with you, in the Gambia, I don't know if this is in all sectors, but you have a principle in the management, it's called the Peters principle. You promote a person to the level of his incompetence. There are a lot of people, they don't have the competence to manage where they are. So the internal auditors can audit and know whether this particular manager is being promoted to the level of incompetence. That's called the Peters principle. But there are a lot of principles behind that. You go to Social Security and Housing Finance. You have people taking charge of a responsibility. But to be honest to you and fair enough, there are some of them, they are not competent to handle those areas. But to be able for the board and the management know that, the internal auditors have to audit. And that form of auditing is called performance audit. So let's go to operational audits. Operational audits, I already explained, has to do with you assess all the organizational resources of the organization. So that gives you the types of audit or the focus areas of what auditors do in an organization, is particularly in this case, internal auditors. Because internal auditors are within an organization. External auditors are outside the organization. So let's go to the next slide. Okay. So a process. Yeah. You are an internal auditor. The audit committee you are an internal auditor. You are being, and then you get a memo that one department in GRA, which is the operational department, has to be audited. As an internal auditor, you get the memo. But how do you go about it? Oh, University of the Gambia. University of the Gambia is supposed to have an internal audit. It's an institution. It's supposed to have an internal audit. If it doesn't, then it should. If it should, the internal auditor is being presented a memo by the by the audit committee, the the person in charge of facility has to be audited. The facility department has to be audited. And then you as an internal auditor, man, you don't know where to start and where to end. Man, that's what you call chaos theory in management. So you are in a complete chaos situation. You don't know the process. A process in management is called physiology. When you study organizational philosophy. So we are laying to you people a process argument. If you want to become the best internal auditor, you need to know your way out, the process to use. Peter Drucker, he brought up, it's one of the greatest management theories you can ever think of. He came up with the efficiency effectiveness model. Effectiveness has to do with getting the job done. Efficiency has to do with process. Doing things right and doing the right thing. If you want to do the right thing and you want to do things right, for auditing the facility department of the UTG, you need to know the process. Now, the process is this. First, you have to plan. By planning, then you can go into the field, do the field work. Upon doing the field work, report. In the process of reporting, there are steps you have to undergo. You write a draft, review, adjust, and then the final draft will come out of that, and then present it to the management and the board. Because you are an internal auditor, you don't present it to the people outside. And then upon doing that, internal auditors, they follow up. That external auditors don't do that. They can do that only in extreme cases. But internal auditors, you have to follow up. Why do you have to follow up? Whether they implement it or not. In the planning, what do? You see, when you read an audit report, the auditor general's office, auditor general's office, or whatever they call it, when they do their auditing about GPA, Gambia Ports Authority, they come up with their reviews. The review is now a report, and the report is presented to the Gambian people. That report that is presented to the Gambian people, if you read it, they will underscore the different areas. That's why knowing the different areas in a report and knowing what a report should entail, the writing nature of a report is all important for you to know as an auditor. But that's a detailed part of this, that will be a detailed part of this presentation. If at all, there will be a second lecture into this, because each of these areas is voluminous. Now, there are requirements that you're supposed to know. And there are materials that are explanatory that you're supposed to know. We call them any report. The conditions you have to find out, there are requirements and there are explanatory material. Which the explanatory material is the one that guides you. It's not a must. But the requirements are all a must for an internal auditor to use. But the explanatory material, that part of the entire embodiment for an internal auditor to revisit, because that's what you do in the planning. You have to review most of the materials. And in reviewing some of the materials that you are entitled to know before you start the work, you have to read the requirement part and the explanatory material part of the entire stuff. The must do and the areas that are of a guide. Okay, now let's see. Planning phase. Audit requirements. It's a must do one. That is what I was explaining. You have to know the requirements before you plan. Review the guidance relevant to the audit. There is a guide that will also be given to you. Review it. It's not a must do, but it helps you as an internal auditor. Review previous audits. GAMCEL has a lot of audits, audit reports. Some of them I've read it. Man, very damaging. That's why GAMCEL, I don't know whether it's still surviving. If it is surviving, then that's a hard pull off. There were a lot of wrongs that were going on there before. To be very honest with you, I would suggest to each one of you, the Auditor General's Department, they are doing a heck of a good job. All their audit reports are published in their website. If you read some of these institutions, it's very unfortunate. It's no doubt that's the reason why they won. They recently won the prize being given to them in South Africa. The Gambia's Auditor General Office. I think they won some form of a prize, but I don't know which one it was. They are doing a heck of a good job. So all those audit reports become a review to the internal auditor, because the GAMCEL has a lot of audit reports being generated by the internal auditors. So you review first. If you are going to audit the IT department, you have to review the past audit reports, not just the requirements, not just the guide, but review the past audits. And that will help you to know, oh, they do have the same mistake over and over. The past audit reports, I read it and I audited them again, same mistakes. Not only to review the previous audits, but you have to set a timeline and a budget. Timeline and a budget. You see, that is one area that is costing the Gambia. There was a team that came to Chicago here, the Auditor General's office. I think they came for training. And in that training, I think they surpassed their timeline. So in other words, the department responsible did not actually put a well-timed frame and a budget to that time frame so that they can be here on time, do their stuff on time, get away from here on time, not to cost the Gambia a lot of money. So are you guys hearing me? Yes. Okay. So as an internal auditor, I don't know, my video, something might be wrong. So as an internal auditor, you make sure that you set the timeline and the budget for doing or to undertake such an exercise. If you don't get your timing right, then it's most likely your budget will not be right. And if your budget is not right and the time is not right, then you'll be costing the organization more money, because the audit exercise may take a longer duration than you even thought of. So that's why in management we have what you call contingency planning. So you do other stuff that will be contingent to what you don't know can happen. That's why in management we have what you call black swan. Things may pop up unknowingly. Things you don't know can happen. That's called black swan. But there are certain things you can know. Those are called white swans. But even with the white swan theory, it will tell you you always have to build up your contingency in case if things happens, then your budget is online. Cater for some monies as a contingency if in case certain things happen, knowingly or unknowingly. The unknowingly is the black swan theory. The knowingly is the white swan theory. That's Fielder's theory. Fielder is the one who came up with contingency theory. So now, did I miss this? Am I on slide 8? Let's stop. Hello, Lang.
Yes.
Do you know where I stopped?
The previous, before this one.
Before this?
Yes.
Okay, so perfect. You got it. I think something is going wrong with my laptop.
This was where you stopped.
Yeah, I think my camera is not even going on. I don't know why. So, but let me explain this quick. In the planning phase, you make sure that you review the requirements, review the guide, review previous audits, set a timeline and a budget, and then create a plan. It's called the audit plan. And in creating a plan, you will have a checklist. The staff, the material, the so forth and so forth. Then you involve the people you are going to interview or the people in charge. We call them the process owners because you have to undertake interviews. These all have to be done in the planning phase. And then you schedule a meeting. Once you schedule a meeting, then you just say to the facility department, I think my best belief is Dr. Salieu Bojang. Salieu Bojang is in charge of facilities at the University of the Gambia, if I'm correct. Then you write to him so date in so month in so time. The internal audit will be coming to review the facility department of the University of the Gambia. But before then, you've reviewed the requirements, you've reviewed the guide, you've reviewed the past audits and so forth. And then after planning, you undertake the field work. You go to the field. And in the field work, you interview the people or the process owners. Interview all of them. Review their documents. Don't just interview them, but review their documents. And then you do what you call testing the controls. Now, testing the controls, let me explain. I explained one of that. When you go to the bank, they have cash journals, they have bank statements and so forth. You can test whether the signatures are there. Signatures are one of the controls, but not only signatures, the entries, are they well entered? Where are they entered? Are they entered at the right places? Those are all controls. Did the cashier take it to the supervisor before it goes to the manager? That's another control. Was the there was at the Commission of Inquiry recently at the Brikama at the local government. There was a guy who used to do withdrawals without following the process. And he was asked, do you know you're doing that wrongly? And he said, yes. He was just going, withdrawing. without following the routine process. So in other words, what you do, you test the control. How did that withdrawal went on? Was he communicated? Who communicated to him? Was it in writing? If it was in writing, was that the regulations or was that the rule? And if he is to withdraw, if he withdraws, where should he bring the money? Those are all controls. You test all of those ones. So testing controls means you develop a checklist, and out of those checklists, you look at it whether it is actually what's supposed to happen. If it doesn't happen as it should, then the control actually failed.
Sorry,
Yes.
We should be wrapping up in the next 10 minutes.
Okay. So, and then you, after testing the control, then you record. Once you record, then you give suggestions. So that is particularly the field work. Field work, you conduct interviews, you review their documents, you test whether they are actually signatures are there, or whether they follow the protocols and so forth. You make sure that all those testing, you test it yourself, whether they actually happen or not. And if they happen, whether they happen as it's supposed to. So, and then you record whatever you have to record. And in recording your correspondence with them, everything has to be through emails. You don't do through any other format, through emails. And then you write suggestions. Then you do the reporting. Then after the field work, you just come and do the reporting. You write the report. You just get the draft, review the draft, and then obtain the final report. And then you give it to the management or the board, but through the internal audit committee. So if you develop your report, when sending in your report to the board or the management, you do it through the internal audit committee. And then you do the follow-up to see whether your suggestions or your recommendations or the exceptions that have been observed have been implemented or not. So that is the process you have to do. You plan, and then you do the field work. After the field work, you report. After the reporting, you follow up. It's as simple as that. So I will go to, perhaps I think that's the last slide, the internal audit framework. So you see, now you know how to go about doing the audit. You know how to go about doing the audit. That's the process. You plan, you do the field work, and then you do the reporting, and then you do the follow-up. But you need a framework in mind, not only in mind, but on paper. So this is where concepts are very good. Models are very good. Approaches are very good. So in essence, what you are seeing here is a framework, is an approach, is a model that guides internal auditors in auditing an audit department in order to generate audits, and those audits can be reviewed and be obtained in the final report, and those final reports will now be given to the board and management to make informed decisions. So what are those frameworks? There are a lot of frameworks. There is another framework called the ISO, but I just picked two randomly. But there are other many frameworks out there that you can use to guide you in doing that process that you're supposed to do. So let's take the COSO approach. You have the COSO approach here, you have the COVID approach. These are basically invented by American-led organizations, predominantly, with some Western agencies, organizations. So the COSO method has, if you look at it, the front part you are seeing, the top part, you have three in there. You have operations, you have reporting, you have compliance. We call that the control objective. The top of the ice cube, that's an ice cube right there. So the ice cube, at the top part, you have what you call the control objective. Those are the operations, the reporting, and the compliance. But the top part is supported by the front. You see the front part that you have? Those are called the pillars or the foundations. Now, the pillars, you have what you call the risk assessment, the control environment, the control activities, the information and communication, and the monitoring activities. Those 5 at the front of in the front face of the cube are the ones that support the control objectives. And by doing so, what happens? You'll be able to prevent or detect or be able to manage fraud. So that's basically a framework that you can use. So you develop your pillars, and these pillars becomes your foundations, and those foundations actually support your objective categories, which are your operations, your reporting and compliance, and then you will be able to prevent, detect, and manage fraud. But I'm rushing here, but this is too detailed than that. I should have taken more time to explain this framework. But because of lack of time. So in the pillars too are also breaking down into 17 different parts. So each part might have about 5 different areas or 3 different areas you have to work on that. So, and then that's one framework. This is just a framework is to be used by an internal auditor to guide you in your process to undertake the review or the assessment that you have to do with a particular department in order to generate the audits required for the board or the managers to make informed decisions about the organization. So the COVID one is also a tool, if you want to say it like that, is also a framework that you can use to guide you. But what is more important, knowing the process. But knowing the process, you need a framework in mind. So, but the COVID one is being recently developed in the 1990s, but that is only geared towards the IT sector. So for information technology related audits. So you can use that framework to guide you in using the process we just talked about in order to audit a particular audit department in order to generate the audits necessary for the growth of an organization. Now I will go to the summary. So summaries are very good. It captures everything we've discussed. If at all you miss a lot, or my explanation to the different areas we have been oversighted in order to be able to fully understand. So first, we explain the basics. The basics were internal audit. I think I missed this. The number 2 should be internal auditing. So internal audit, we explain it. The second one should be internal auditing. And the third one, internal audits. And the fourth one, internal audit staff. What did we say about internal audit? It's a unit in an organization that is responsible to audit other parts of the department in order to obtain whatever information to be obtained and for board members and the managers to use to make informed decisions about the overall organization. So internal auditing, we say that is actually a process. This is where you do the consulting, and this is where you do the consulting and the assessment. But in doing so, you have to be independent and unbiased in order to be able to retrieve whatever good of an information for the organization. So that's the second one. I should have said auditing instead of internal audit. The third one, internal audits, those are reviews. When you do an audit, whatever material you get out of the audit is called an audit. So it's a review. So the staff engaged in auditing are called auditors. So then we went to the purpose. We said, by knowing the basics, we also need to know the purpose of doing an internal audit. We said to make an informed decision making, to increase confidence and increase credibility. So very important. Those are the 3 main purposes of an organization. So because with that, I can be able to buy shares with Apps Media. So with that, I can be able to bank with Islamic Bank, with the audit alone. So things of that nature. Or Sankun Silla, Islamic Bank can be able to loan Sankun Silla Enterprise because they read into his audit reports, and that bring confidence to the bank that Sankun Silla is good enough to loan, and things of that nature. So you can see the purpose of an audit. It increased credibility, increased confidence, informed decision making. So, but not only the purpose, but we also went through the types. We said there are basically 6 main types of internal audits. Operational, where you have to focus on the resources of an organization. Performance, where you have to focus on the staff or the employees of an organization. IT, where you have to focus on the infrastructure and the information systems. And the environment, where you have to focus on the impact of your organization to the society or to the environment. And then the financial audit, you have to focus on the financial reporting or the financial reports. The financial report is the end product, but the reporting is the recording. Because when you are defining accounting, if you don't accounting is blah blah blah, but inside that definition you missed out recording, I will know you're most likely to have maybe 60 over 100 in your definition. So in financial reporting, in financial audit, you focus on the reporting and the reports. So compliance audit, that's where you focus on the rules, the regulations, the laws, and so forth. Whether IEC has met the regulations or the laws of the national, the act, all the different acts that guides the operational nature of IEC by the National Assembly. Because sometimes the National Assembly can come up with all the laws, but some of these institutions, they don't follow the laws. So if you're an internal auditor, you need to look at whether IEC is compliant to the laws of the state. So if it breaches some of those compliance, then it's at the wrong track. So the other thing we discussed was the process. We said it's not only the basics you have to know, not only the purpose, not only the types, but also the process. We said if you're an internal auditor, you need not to be confused with how you're going to do your internal auditing. You have to plan, you have to do the field work, you have to report, and then do the follow-up. And each of these, there are different things you have to do. On the planning, you remember you have to review the documents, review the requirements, and so forth and so forth. So come up with an audit plan and so forth. On the field work too, this is where you have to do interviews. Not only the interviews, you have to review their documents. The facility department of the University of the Gambia, their documents, all the documents, they are writing and so forth, all the paper trails. What is relevant, you review everything. And then you develop your report. If you develop your report, then you follow up. That's the process as an internal auditor or as an aspiring internal auditor. And then we said, we need to know the differences between me becoming an internal auditor and someone who is already an external auditor. So external audit are people outside the organization. These people are financially, are CPA certified. They are very well ingrained when it comes to accounting and things of that nature, financial reporting and all that stuff. But the internal auditors are within an organization. We said they are employees of the same organization they are audited. But the external ones, they are coming from outside. And then we said the internal audit, they report to the board and management. They don't report to the people outside of the organization. It's also very important to know that. But the external auditors, they report to people outside the organization. Very important. And then we said internal audit all has to do with internal control. This internal control, you have to really, it's a whole topic of itself. So internal control on the internal audit is performed on control objectives. Control objectives are risk management, compliance, and things of that nature. I think you can remember the process, and those are called control objectives. So on the internal audit, the internal controls are focused on the control objectives. But on the external audit, the internal controls are performed on the financial report or the financial reporting. So these are two separate things. And then the auditors on the internal report, they only assess and improve. But whilst the external auditors, they check and confirm. So, and then we also went through the last one, which has to do with internal audit frameworks, which are two different types. We have the COSO and the COVID. That has to do with it. Hello?
Yes.
Are you guys there?
Yes.
Yeah, so that's internal audit. You can see how fascinating the topic is internal audit. We pray some of you become internal auditors, and your focus will only be the organization you are serving. All you have to do is your main focus is about the organization and any risk associated with the organization, to make sure that the organization in the long run become flawless and is well managed when it comes to risk. In doing so, you have a lot of different things that you have to do, not only understanding the basics of internal auditing, but also the processes that you have to use, not only the processes, but why internal audit, or the purpose, but not only the purpose, you have to know about all the other different elements that needs to be undertaken. But there is a whole lot of things to be shared in this. And I am very, very happy to be sharing a little with what I can. In fact, I just rushed to come because I missed the timing. So I was at somewhere. I have to rush and then just come. But thank God I developed this a few days ago before. And then now the floor is open to Dr. Sanyang to pick it up, and then hopefully with question and answers, and then we can wrap up.
Thank you very much, Kufa. I think it's a pleasure having you once again. As I said earlier, this is not the first time. Kufa has always been there. He's so passionate, always to interact with students, interact with young people, and he continues to do that. All right. So at this point in time, I think we'll take a few questions. It's already after Maghrib. I've not prayed, and I know a lot of them have not prayed. So we'll take a few questions. Then somebody will give a vote of thanks, and we call it an evening. Okay? The floor is open now. You go ahead.
Yeah.
Mfa, are you hearing?
No, I can't hear him.
Come
I
closer.
can't hear him or her.
No, come closer. It's not working. No.
I hope you're hearing now.
Yes, I can hear you now.
Thank you.
Drag the chair.
No, I will ask and go and sit down.
No, okay, your face. No, move behind a little bit. Good. We want to see your face. Good.
Okay, what I want to ask is with regards to what you explain here. I can understand it's about post auditing, and there is also what we call pre-auditing. So I want to ask, what do we do with regards to the pre-auditing? What do they do there as pre-auditing? Yeah.
Okay, good.
So maybe let's take a few questions, then you answer all of them at a time. That's one.
Okay.
Any other question? Okay, go ahead. Maybe before you finish, we'll have another question.
No, I got the first question. What actually is done during the phase of pre-auditing? So if I can just combine all the questions, I think that'll be great. Feel free. Just ask questions.
Somebody's coming. We didn't have a mic, so they'll have to come close to the laptop.
Oh, okay.
All right, thank you, sir, for that wonderful deliberation. Okay, what I want to ask is concerning about the internal auditor that we are discussing. Like an internal auditor is an individual who is an employee of the organization, and in your deliberation said, as an internal auditor, it should be independent, considering the fact that the person is reporting to the board or the management, whom as well is an employee of that particular organization. Now, what are some of the mechanisms, or let's say a followed principle that an institution need to put in place so as to back that particular individual who is an internal auditor of that organization to be of when it comes to good biasness and something like that? Thank you.
Wow, beautiful question.
Any other question? Any other question? All right, I think you can answer those two questions for now.
Okay, so I will start with the last and then go to the fourth, so that way we don't forget. So you see I don't know, Lang, can you see me?
Yes.
Can you see me, right?
We are seeing you.
Huh?
No, we are not seeing you. I think your picture is what we are seeing.
Oh, can you see me now?
No, it's your picture.
Okay, don't worry. I will just explain. But it's interactive if we are seeing each other whilst moving. So I will start with the last question. These are two powerful questions. In fact, so what you are seeing right now is a summary of all that we did, just in one page. So just to let you know, so I did it in such a way that everything we said is all summarized in one page. So this will be uploaded in Apps Media. Hopefully, if the course lecturer Lang Sanyang grants it, usually we have these documents uploaded in the Apps Media website. So you can go there, download, and then you will have all the material. And then it can be for your future review. We have entrepreneurial marketing there. We have creativity, innovation there. We have a lot of views. Each video is almost about 10,000 views. It's all on YouTube. So a lot of students are reviewing these materials for their own benefit. Some may not be in the Gambia. So long story short, regarding what the lady is asking, has something to do in internal audit we call ethics of audit. Ethics of audit. This ethics of audit, it helps in guiding that particular internal auditor or audit team to be independent in nature. So we'll explain more in that. That is what the lady is asking, in order to not make the internal auditor or auditors become biased because they're in the same organization and they are going to audit a department where they have friends. Maybe the wife of one of the guys is working in a different department and so forth. So a whole lot can come into play. There is someone who always calls one of the auditor at his own personal home for attire, to drink tea and all that stuff. So they become so mutually of a friend. So when this auditor or audit team goes to that particular department, they will be biased, they will not be independent. They will say, oh man, this is my friend, man. I just have to water down what I have to do so that they can escape and so that he can be promoted and all that stuff. That is what the lady is asking. How do we avoid that? That's where ethics of audit comes in. So this is a whole topic in internal audit. Okay, so how do we do this? Number one, rules have to be in place in an organization. Rules, laws, regulations, procedures, all different types of acts. Any good organization is supposed to have a very good one. And the people who design this in an organization, they are at the strategic level of an organization. The board of directors or the directors or the managers. And then it filters through. That's why even when you design laws, rules and regulations that helps internal auditors to become independent, but they need those laws and rules need to be audited. Whether the audit department or the auditor is in compliance with those laws and rules. And the department they are auditing, whether they are also in compliance with the laws and rules as to how they facilitate their work. Once those laws are good, trust me, man, some biasness will go off the table. One thing I will tell you, police officers in here, in the United States, I'm not saying there wouldn't be one or two or a bunch of them who is not corrupt. But boy, it's hard to see an officer. If you are mistaken, an officer stops you on the road and you want to bribe that officer, you yourself, you are in a problem. So you see how the laws and the rules kind of regulate the auditor. Sorry, how the laws and rules and regulations kind of regulate the parties involved in an organization. So that's number one. So to answer the lady, laws, rules, regulations also serve to make a particular auditor or audit team to become unbiased. That's number one. Number two, you have what is this? It's called independence of mind and independence of appearance. But that has to do with philosophy. Appearance has to do with perception.
Damn.
I need to explain something. So, in other words, what I'm trying to say is integrity, professional competence, training your people to be well trained. By training them, that also serves as a way of they becoming professional. When a person becomes professional because of competence, that also helps the person not to become biased. Are you following me? That's number two. Train employees well. Number three, you see our behavior. You see, management is divided into three phases. You have the physiological phase, which is the process, and the bottom one is what I'm coming to explain. The structural phase, I'm not too worried about that. That's at the top. Process phase, structural phase, and then you have the behavioral phase, or what you call in psychology, the psychological phase. Behavioral phase is the psychology. Process phase is the physiology. Structural phase is the anatomy. So you have the anatomy, that's how you define an organization. That's how you define a management. But what am I coming to explain here is our behavior, our conduct in our organization. You see, ethics is different from morality. Ethics is the laws, the regulations, and the rules and the process. In the Gambia, we used to hear people saying, hey, curry is ethical. That's wrong. I don't know, where do you get that? And ethics is a paper trail. Morality has to do with human beings. Ethics has to do with the organization. Now, in other words, what I'm trying to say here, our psychology within an organization, our behavior within an organization has to be moral. And when our morality is well defined, that also helps us to become independent. But beyond that, you have to pay the auditors well. If you pay them well, it's most highly they will become unbiased. They will say, I'm paid well. You cannot bribe me for my work. That's one thing. Number 6 or 7, I can't remember. You see, key auditors, you don't promote them to the level of a director. I'm explaining that. I hope you're following me. The people who are key in auditing, you don't promote them to the level of whatever director or whatever stuff is. You leave them at their own level, and you pay them well, and you make sure that they are rotated, and their rotation period should be long. Have them a loss where no one can fire them. When they know you cannot be fired, you become unbiased. Mr. Director, I'm coming to audit your office. Regardless of what happened, you cannot fire me. So to answer the lady, long story short, those are the ingredients that become a paper trail of your exams in order to have an A+. Those are answers, legitimate answers. But summarized to say, structures need to be in place, anatomy, process need to be in place, that physiology, behaviors, our conduct, code of conduct needs to be placed, that's psychology. All these 3 in combined help auditors to do their job right. In order for them to have an independence of mind and independence of appearance. Okay, to go to the first question, the first question has to do at the pre-auditing level. Hello?
Maybe you answer that fast, Va.
Are you guys with me? Yeah, I will answer that fast. You see,
Okay.
the guy who asked that wonderful question about what do we do during the pre-auditing phase. There's a lot that we do. We've even explained it here. We said, if you remember, at the internal audit, we also have to look into the process. How do we go about doing internal auditing? And in the internal auditing, we said during the planning, before the field work, there's a lot you have to do during the planning. That's pre-audited. So perhaps maybe you missed it, or you need more of that. So I will explain a little bit. So if you study psychology very well, sorry, I'm going to answer your question, but because these are all related to psychology, it's all related to management, it's all related to strategic management, or whatever you may call it. In psychology, or in marketing, when you study marketing very well, there is what you call the buyer behavior model. In the buyer behavior model, there is one buyer behavior that each one of you might have. It's called post-purchase dissonance theory. Post-purchase dissonance. You see, the dissonance, it means in psychology, a regret. You buy something today, and then after you regret why you buy that. In auditing, if you don't do your pre-auditing very well, and you go to the field, you are not well prepared, that is most likely after you review your financial audit report, you will regret because you did not do your pre-auditing very well. That is what the gentleman is asking, a very intelligent question. So gentleman, what I will do is I will take you back to the process. Look at the planning. The planning area, what do you have to do? These are all the stuff that you have to do in the planning section before you go to the field. So that's called pre-audited. You make sure that all the requirements necessary for an audit is being read. You make sure that the guide that is given to you as an auditor is being read. Review everything. Make sure that the previous audits is being read. Make sure that you extrapolate how long it will take you to do the audit, and as well as the budget. Then you create a plan. This is all in the pre-auditing phase. In the plan, your communication to the office, the checklist, all the different areas that you are going to tackle, which can be revised when you are in the office itself. Make sure that you know who to interview and not to interview. And also schedule a meeting. Once you schedule a meeting, then you write a memo to the department or the facility department or the head of the facility department and said by that time you've done excessive reviews, reviewing of the document, reviewing of the requirements, reviewing of the past audits, setting up a timeline, setting up a budget, developing a checklist of all the different areas you are going to audit, how you are going to do it, the timeline it should take you, the budget that is associated so that you don't run, and then schedule a meeting and then write a memo to the particular department that at so date, at so time, we will be there to conduct an internal audit of your department. That is all you do during the pre-auditing phase. Once you do that, trust me, gentlemen, never you will be associated with what you call post-purchase dishonors or post-dishonors. A regret.
Thank you.
Regret will never come to you. Yeah.
Time. It's late here. Oh. All right. Mpa, are you with us?
Yes, I'm with you.
All right. Thank you for that clarification. Gentlemen, next time, pay attention so that you know, he's treated this earlier. So now we've reached the final stage. Any more questions? No.
Kodolan, we need questions in accounting, in managerial accounting. It's all associated with auditing, bank reconciliation, things of that nature.
No, I understand. You know, the problem is they are not thinking, their mind is not here, their mind is on transport. It's almost Isha time. We've not prayed Maghrib.
Yeah.
Some of us, some sneak out and pray. Huh?
Yeah.
So I think we now come to the tail end. So can we have somebody to give the vote of thanks? Right? Who's going to volunteer? Mpa, thank you very much. I once again appreciate this. But I'll have to allow one of the students to, you know. Okay, the class rep is coming to do that.
Hi, Mr. Bojang.
Yes.
We appreciate you so much. We thank you for your time that you spend with us and the lectures that you have given to us. We really appreciate you and then we thank you. And good night from our end. Thank you.
Oh, thank you.
Once again, thank you so much. The next session, you will, of course, not be hungry. You will stay here until 9, huh?
All right, thank you.
You're right,
All right.
All right.